Now we are.
Yeah, just okay, perfect.
Okay, guys, we are recording and we are going to take a look at the questions. Let me see where. Oh, it was sent me on the private here. So, guys, I'm going to paste the question here in the chat, and if anyone has another, we are going to answer like 4 in the first time, and then we can keep going. Okay. So, how do you know certain direction of the market before it is obvious? Signs. So, Corbin, I'm going to give you control of my screen. So if you can start with this one.
Okay, yeah, sure. Let me know when I have it.
Yeah. Okay, now you do. Please.
Okay, perfect. All right, am I using it? This is super weird. Okay, wait.
Oh, do you want to use other thing?
Oh, I want to annotate. Oh, I found it. Okay. Yeah, so how do you know certain direction of the market before it's obvious? Which signs do you look for? Well, I mean, I think one thing, if you don't see if the market is obvious or not, usually the best way to see which direction the market is going is you go to the higher time frame and see what they're doing. So right now we're on the what time? This is monthly, right? The 1S.
Weekly.
This is a weekly. Okay, so either way, it's weekly, right? Let's say we're looking at this right now, this area. Let me drawing it, right? If we look at that green part that I just showed, we can clearly see something's happening, okay? Simply looking at just down this way, we can kind of see that this is in a bearish market simply because you can see that what we're creating is lower highs, lower lows at the moment, especially with this lower low being created, right? This is our previous lower high. And the reason why we're looking for maybe UJ to possibly go down is because you can see that over here, right over here, the candles are exhausted. Firstly, like there's no momentum that it wants to break this very strong resistance area, which was the previous lower high resistance, and also because this will be potentially our other lower high. And then you can envision either we're going to test the lows or we're going to create a new lower low under. So the first thing to take note on which direction the market is going, just go up to the higher time frames and then see if the market is creating lower highs and lower lows, then we're creating we're in a bearish market. If it's creating higher highs and higher lows, then we're in a bullish market, right? So I mean, that's the simple way of seeing the certain direction of the market, and it works for all time frames. So weekly at the moment, it looks like we're creating a potential lower high, and then we might go test the lows or create a lower low. And maybe on the 4 hour, it's a bit different. Maybe on the 4 hour, we're actually in a bullish trend, but we have to take into account all time frames and take that into account, because the higher time frames rule the long-term trend, but the 4 hour allows us to enter. And we have to take into account that, where's the annotation gone? We have to take into account that this part that I highlight, right? Overall on the weekly, it might be, we're creating that lower high, but on the 4 hour and the daily, we'll most likely have bullish structure where it's creating higher highs and higher lows. That's what we have to take into account. And what I find some people doing that I feel like is quite wrong, and I want to mention, is when we're at this stage, where we're at this price zone, people sometimes look for buys to take for a swing. But when you look on the weekly, we're at the resistance, right? So you're technically buying high when essentially with Forex, you want to buy low and sell high. So because we're at this resistance, technically a possible lower high, we should be looking and waiting and hunting for sells. I mean, that's how I look at the direction of the market. I don't know if you want to add anything to that, Marcus.
Man, I couldn't. It's perfect. If I could add something in the, how can I say this, in the psychological way, I would say that if you take a look at this big green candle here, pushing right towards the resistance, and then you have this nice bearish candle here, it just shows how the rejection goes strong, you know? And then you have to take care of what I just say, like bullish structure in the daily, maybe 4 hour, but not in the weekly. So why the hell are you going to just buy a swing here? You know, it's not, I mean, yeah, it makes no sense at all. So I think trading is very obvious. You just don't need to pressure things, you know. Just
Hmm.
take the time for trading.
Yeah,
People just think,
I
oh, I
agree.
need to make money, money, and then they forget the analysis, the easiest part. So
Yeah.
yeah,
Okay.
uh,
To me, it looks like price broke out of a triangle and tries to retest right now.
yeah, nice.
Yeah, I mean,
This,
it could be too, because what we have to take into account, like I said, at the moment, I did mention this is a possible lower high, right?
yeah,
Possible lower high, but that's because we have this very strong resistance over here that I drew. But we also have to take into account that this triangle we had on the daily, we're still above that zone. So it doesn't mean we can't go higher. Maybe we'll go higher and create a double top and then come down. So
perfection.
that's why we go down to the lower time frames to see the structure on those time frames to see what's happening.
Yeah, consider the structure you just mentioned. We have this huge low here comparing
Mm-hmm.
the previous low. So yeah, if you draw a weekly descending trend line, you know, suppress broke out and now retesting it. Yeah, there's a thing with trend lines that people don't take a good look on. If you just, I mean, it's like Elliott waves, you know, guys who trade Elliott waves, they just think, oh, it has to make another leg or another push here. But when
Mm-hmm.
you draw a trend line, for example, you can draw from here or from here. It doesn't matter. If you take a look for, let's take this one, for example, okay, considering that high, because here you have 2016. So it's more than a year already. Oh, okay, it's broken. Might be even if it was retesting, it's still a lower high. So you have to
Yep.
take care. Yeah, perfect. Even this one, nice. So now you have a resistance here. Let's say at this point, this one that you just mentioned, Corbin. Here, if you consider this one, price needs to break it before you can consider. Oh, okay, it just broke the trend line and now it can go up. You know, you have a full
Yeah.
resistance here. Period.
Exactly. I think a lot of people forget that with trend lines. That with trend lines they say it's broken and they're like, oh, okay, it has to go up. But what they don't take into account is the structure of the market,
Yeah,
which is more important than a trend line.
the
Because
most
like you
important.
mentioned, yeah, trend line is biased. You want the trend line to look good for yourself, while structure will create what it wants and it will tell you what it is. But trend lines literally just say, okay, I kind of like it here. I want to see this. And that's how you take the trade, and sometimes you lose.
Perfection. Um, you know, it's program in order to know identification. Yeah, yeah, yeah. Nice. Let me go to the other question.
Yeah.
This one is nice, Corbin. How
It's
do you?
also, I guess, what
Oh,
we've been
sorry.
talking about as well.
Yeah, yeah. I truly believe it. How do you filter the real direction of the market? Avoid fake outs. Do you want to go with this one, or do you mind if I go?
You go, you go. Let me just
Okay.
quickly, I'm going to use the toilet real quick.
Okay. So, guys, this one is pretty simple for me because, as Corbin just mentioned, we have the higher time frame. This S here is weekly. So, if you take a look at a weekly, you have an overall direction. It doesn't mean if you're a scalper or swing trader. I mean, if you're a swing trader, this higher time frame is going to help you, let's say, even more, you know, because you are taking trades for a long term. You are willing to hold them, but if you're a scalper, it doesn't mean that weekly time frame is not going to help you. This weekly, you have to keep in mind, oh, it's a very basic thing, but it has a notion. In order price to create this candle, it has to take, it has like 5 days, you know, 5 to 6 days, depending on the time. But you have to think that this week, this week here, at some time in the daily, it was like a bullish candle, you know? So you have to think, oh, okay, I have noise on the daily, maybe 4 hour, 1 hour, I have a lot of noise. Now, when you go to the weekly, although we have some noise, like here, you can see the overall direction. As Corbin just stated, we have a market structure of a downtrend, you know? Considering this thing from 2016, this area that he highlighted. So in order to just vanish with noise, you have to take a look at the higher time frame. Yes, as is the weekly. You have to take a look at the higher time frame, see where price is willing to go. Like this, where did we make the last low or high? Like this is a low, lower than this one. So we have bearish structure. This is a lower high. So, okay, now we can look for some kind of bearish structure. We are looking for that. But when you go to the hourly, for example, maybe we're going to see like, okay, we are already changing. If you go to the 4-hour, maybe you're going to see a bullish structure like this. Oh, we have kind of lower highs, lower lows, and then we just made a high. And then you can see some patterns like head and shoulders, double tops, indicating in the intraday time frame that we have to go down. But take a look at the 4-hour, how noisy it is. Just go to the higher time frame. I think it's pretty easy. Pretty simple actually. Go to the higher time frame. Take a look at what it's showing. Draw the basic support resistance zones. Trend lines if you want to. Take a look at the market structure here on the daily. Like from these months, you have a higher low, higher high, and then we just made this high. This is the previous higher high. We now, if you consider this as a resistance, we just broke it, retested it in a kind of way, let's say. So we might start to look for sells right now, And then somebody asked about the fundamentals, how you can confluence then with the technical chart. Man, just think like this. Trump, being or not being a good president, it doesn't matter. If he tweets something, the market moves. So we'll have to think, what is happening right now with Trump? He's in the middle of a commercial war, beginning of a commercial war with China, but he kind of, it's relaxed, kind of right now. But we have the problem with Turkey. So what is going on right now in the international markets? What's going on? Because we are looking at dollar, yen. So what's going on in the international markets in the world that we can take a look and say, oh, okay, the dollar is not going to strengthen even more. If you take a look at the dollar chart, DXY, you're going to see that we just made a historical high considering the past years. So it's dangerous for the price to sustain that beautiful high there. And we are very near the 100 point. So the 100 point is like a psychological way. So we need at least to grab liquidity, to make like a lower high. So it's very dangerous to just keep buying dollar. I might be wrong. Price could come up, go up yet, and make a double top, as Corbin stated before. This is the structure of it. This is a changing structure. But you just can't. Don't consider the higher time frame. Even you're a scalper, you're not going to. Oh, I'm a scalper. I'm going to take a look only at daily at max. Take a look at weekly. It doesn't cost anything. You have like strong support resistance in weekly, monthly, for example, but then it's too far away. But you can draw some resistance support here, even trend lines. And then when price touches these areas, you can think, oh, now I maybe have a trade for scalping. I think it's easier. So go, Corbin, if you want to add something, please.
Yeah, so like he mentioned with scalping, personally, I don't scalp. I used to scalp, but it's not for me. I know my own personality. But the thing is with scalping, the best way to scalp, from what I've noticed with people trading, is the best way to win is when you go with the trend. So why would you want to scalp against the trend and increase your risk there? Why you can just quickly just go on to the weekly. It's like you said, it doesn't take much time. It'll take you like 1-2 seconds. It will give you an idea of what's going on and say, okay, we're kind of at resistance. Let me look for more sells instead of buys. So I at least can go with the trend. And one thing I wanted to mention, I kind of already forgot a bit, is can we go down to daily?
Yeah, sure.
Yeah, thanks. Yeah, so the daily, what I want to mention quickly is what he mentioned as well. Like you look at structure on the weekly, we're looking over here. It's kind of our lower high for the weekly, but we could come up and all. And with the daily, he did mention, you see, we create a higher high. We kind of come to create a higher low. And then you see here, we didn't break above the high. So that's where we kind of created like a formation. And what this formation is a bullish flag usually, right? So, and then look what happened. We kind of broke the flag. We kind of retested and went up higher. But what we have to take into account, right, is this resistance was broken. So technically this is kind of our higher high. This is our higher low. And look, now we failed to create another higher high. We on the 4 hour, this is most likely like it's higher low that it broke and now retested. And now it's like he mentioned, what Marcus mentioned is this was a support. We broke it and now we kind of retested it and we most likely want to go down. And if you're a trend line trader, you'll notice that no matter which way you draw your trend line, we most likely broke every single one of them. So now on the daily, it adds confluence to the weekly, where the weekly wants to create a lower high, and on the daily, it has already started to form that. And if you go on the 4 hour, it most likely already started to form lower low and lower highs. So yeah, that's why it doesn't, you guys shouldn't just stick to one time frame. Always go from the top to the bottom and get a better idea of what the market is doing, because that way you really know the direction of the markets. What I don't agree with people is like they only trade 1 hour and then they take the trade and they think it's going to go up, and I'm like, okay, what's the higher time frame look like? And then they realize they bought at the resistance on a higher time frame because
Weekly
on the
resistance.
yeah, exactly, you know, over here probably like they saw this and they're like, oh look, this was kind of our higher low, let's go higher. But they forget to look at the weekly and boom, now you're down and most likely might start the bearish trend. So it's no harm to always look from the top bottom. Always look from the top bottom.
Perfect.
Yeah,
Um,
that's me.
perfect. Let me keep going with the questions. We have 2 more that people have sent. And then we can, to avoid fake out is one way to wait for our confirmation. Man, for me, there's no trade ever in stocks, crypto, doesn't matter. Futures, it doesn't matter what you trade. If you don't wait for a candle closing, I mean, especially if you're a beginner, you're just starting with Forex. It doesn't matter if you're starting for a year, 6 months, 2 months, 2 years, you have to wait for the fucking candle to close. Sorry for my language, but man, people just take a look at, like this, for example. Oh, it just broke this minor resistance here in the minor time frame in this 4 hour. It might be like a resistance and the guy is just buying here, but the candle didn't close yet. We have a daily candle. Take a look at this one. And then this candle close like this, it drove us to a minor down trend, let's say like this. So we have like 200 pips here. If you don't have a stop loss either, you're going to get screwed. So if you had waited for this candle to close, you wouldn't be just crying right now. I mean, you have to wait for this to close, every time. Fake out, think, people say market makers, or it doesn't matter. Someone needs liquidity. Price needs liquidity to drive something down, for example. In this example, if you take a look at this wick here, price went higher. A lot of people might have been buying here, and then it just shoved down. It did it again 2 days in a row. Those are fake outs. They just drove people here. They just took people's money to make this. This is a fake out in a term, So if people had waited for a confirmation candle, for the candle to close, does this candle look like a good, how can I say, a good confirm to buy something? I don't believe it, So if somebody had waited for this candle to close, they wouldn't be buying here. They would have seen this as a resistance, as Corbin stated, and they would just sold it, making money. That's it. Fake outs are easy to, how can I say this, to don't get caught in a fake out just by waiting for the candle to close. There's no secret here.
Yeah, you said it perfectly. I mean, when people talk about fake outs, I'm like, look, if you got stuck in a fake out, the only reason you got stuck in a fake out is probably you didn't wait for confirmation. That's why with Forex trading, it's mostly psychological. It's all emotional, when people, like, let me take the annotation, like where you mentioned in this particular candle right here, where there was the wick, right? Oh, that's a bad drawing. Over here, where people thought, okay, I might be missing this very big bullish move to the next zone. Maybe they didn't look at the weekly. They're like, oh, okay, I'm going to enter. But what they should realize is you already kind of missed your entry. Just let it go. what we have to realize with the Forex markets is we shouldn't rush into anything. There will always be a setup in the future. If you think about it, right? If you waited, look, there was a setup right here. This was a weekly resistance. You put your SL here. Your first TP is most likely here. You know, you're fine. You just have to wait for the candles to close. That's the most important thing. People always think that they miss a big move, but they don't realize that in the future, there's also going to be a big move. We have 365 days. You know, there will be one big move you will catch, but there's also going to be a lot of moves you're going to miss. And that's one thing people have to be content about. They can't catch every move.
Yeah, perfect. Hey, Kevin, are you there?
Yeah, I'm here. Oh, Kevin.
Yeah, Kevin. I just saw Kevin here. I'm thinking if it's his, but it's him. But let's keep going.
Okay.
Man, yeah. Only a thing. What you just said here, we have like 200 pips again. So yeah.
Yeah, exactly. You don't have to rush into anything. You know, the markets will always set up something. Let me just quickly. Whoa,
yeah,
what
please.
happened?
Do you want me to draw? Let me clear this. Okay.
Yeah, I'm trying to clear it. I want to touch.
I just did.
Can I open something? I want to open a tab. Let me send you a link. I think people should print this out and put them on their walls. Candlestick cheat sheet. I think this is a great thing. I'll send the link into the chat.
Oh, okay.
So it's just Japanese candlesticks cheat sheet, and people should really just print it out, put it in front of your computer, and you'll see, you know, like what did we just form? We formed something, just like with that daily, we formed an evening star, right? On the UJ. If we scroll down a bit.
Yeah. Here. Let me just unmute Kevin. 1 second. Okay.
Okay, sure.
Just control my screen, Kevin.
Oh, can I?
Yeah. Just give a click and then. Oh, okay.
Okay. Yeah, you see here? You see the evening star? Whoa. What happened? It's weird.
Y'all hear me?
Yeah, we can.
Yeah, I hear you. Hey,
Okay.
Kevin.
Hey. All
right, here we go. Clear thing. You guys just print this out. Look at this. Pay attention to that, right? If you guys had this pretty much in front of your, what's going on with this? Shit. 1 sec. I can't. Can you take control back? I can't stop drawing. Yeah, so if you go back to, you can clear it. I don't know how to, I think something happened.
Okay, just aborted the control. Let me clear and then I give you control again.
Yeah, that'd be better. Okay. Yeah, okay. I can't stop drawing. Just remove control from me. It's fine.
Yeah, already did.
Okay. If you go back to the daily, yeah, you can see that on the daily on the TradingView, you'll see that exact evening stop. And if you guys waited for candle closing, that's why it's super important for candles to close, because the candles closing will tell you the pattern. If you don't wait for it, you know, technically you're trading off nothing. That's why price action is so important. That's why putting confluences together with market structure and price action is what's going to help you take that good trade. If you simply just look at something and decide to take it and don't have any confirms, well, you know, anything could happen. That's why it's always good to be patient. Just wait for the trade. There's always going to be a setup. You're always going to miss a trade. If it's already gone and it doesn't fit your risk management, doesn't fit your risk to reward ratio that you want, let it go. Find another pair, find another setup, plan for the next setup, and just wait for it. You know, that's it.
Perfect.
You guys don't have to be rushing to lose money. That's, you know, some people rush to lose money.
Take a week of vacation, you know, don't trade it.
Yeah, exactly.
So how are you, Kevin?
Good. A little bit sick this morning, but I'm doing good. You guys are doing a great job.
Oh, thanks, brother. Oh, we are missing you. Nice that you just joined.
Yeah, it's good to hear you, but you take care of yourself, man.
Yeah. Oh,
but that's thing to add too, a little bit of stuff. You know, there's a lot of people that make money just trading patterns of support and resistance. You know, that's a big thing that I do. You know, I always, in the candle closes, the most important. If anything that you've seen, like the setups that I like to take, is all about the candle closing. You know, that's something that both, you know, Kevin and Marcus, you know, teaches. You got to have confirmation. You know, the candle closing and candle formations at these key areas are very key. You know, support and resistance. You can wait for those candles to close, and price action would always tell you what you're looking for most of the time. You know, so that's why I always say, you know, let price action tell you what's happening instead of trying to predict it all the time. I think a lot of times traders try to predict, they get their analysis and they just want it to go that way, and they get in early just think because they kind of see it going the way that they think it should, and then it doesn't. You know, so let price action be what tells you when to get in and when to get out. You know, don't try to just take your analysis and just, all right, this is what it's going to do. I know it's going to do that, and stick to that, where price action is telling you something different.
Yeah, perfect. Perfection again, Kevin. So we have one for you, Corbin or Kevin. When analysis is done on the higher time frame, which lower time frame would you look at to take your entries on, and what candle patterns would you look for on the lower time frame to enter? I think that's mostly what we were just speaking, right? So
yeah, it was pretty much what we were just speaking. I mean, which lower time frame would you take your entries? That's also dependent on you, what type of trader you are. For me personally, I take entries on the 4 hour, maybe the 1 hour sometimes, but mostly the 4 hour, because I feel like for swing trading, going anywhere lower than the 4 hour gets a bit too messy. You know, too much noise is happening. But it depends on you. If you're a scalper, maybe you go lower. But what you have to do is just go on the higher time frames, and then slowly go down to the lower time frames to take your entries. And which candle patterns would I look for? I mean, I already gave you the link to the Japanese candlestick cheat sheet. All those patterns are valid. It becomes up to you which works for you, and all of them are valid. For me, I love engulfings. I think engulfings are the most beautiful thing, but evening stars are great as well. You know, but the thing is, you just wait for the candle to close, right? Let the candle close. If the candle closes and it doesn't make sense to you, wait for another candle. And keep doing that until something makes sense to you to take a trade. And if it doesn't, and a trade already happened, let's say you missed a big trade, go back to those candles, observe it, take a screenshot, and like annotate on it and say, okay, this happened. This candlestick pattern formed, and I missed it because of this, you know? And next time, after you write it down, you'll know, you're like, okay, this happened last time. It's happening right now. I'm going to take the trade and do it, you know? But that's it. I mean, there's so many candlesticks, candle patterns. It just depends on you. You have to kind of be confident. I can't just say every engulfing you should take the trade. Maybe you'll win in most of them, or maybe you'll lose in most of them. But the thing is, you just wait for the candles to close. For example, here we have a bearish engulfing, right here. A very nice bearish engulfing, I have to say. It's a nice bearish engulfing. You take the trade, and you clearly see that it went above you, and it engulfed another candle. Well, you should clearly get out. The momentum is completely changed, right? So that's why you have to wait for candles to close. Or you just let the analysis run. And the thing is, if it hits your stop loss, very good, it hit your stop loss, because you should have calculated your risk. It should have hit your stop loss, and you should have been happy with that loss, and then you move on to the next trade. Because in Forex, you're never going to win. That's why when you win, you want to win small, and that small amount is what amount you are happy to lose emotionally, and well, your account can handle. And that's how you should trade. It shouldn't be any emotions. If there's emotions to the trade that you're in, you obviously risk too much. Reduce the lot size and just focus on the trade, not the money. Only the percentage returns matter, in my opinion.
yeah, perfect. I have some students that they were poker players, and I was explaining to them about risk management. I told them, like, risk management and psychological part of Forex, of trading, it's like 90% blame of your success in trading. And I gave them an example that I would like to share with you guys. Think like you are flipping a coin. You have 50% chance of the coin giving you a head or the counterpart, I forget the name. You have 50% chance. If you bet money on each one, you are going to like lose 50 and earn 50 every time in a perfect scenario. So when you have a nice stop loss, a nice risk reward, like 4-1, for example, I know it's small, but for scalping, it's very nice. and you have like a 4-to-1 risk reward. Even if you are still flipping a coin with 50% winning rate chance, you are still going to be profitable. Why? Because when you lose, you just lose 1 point. When you earn like 4. So in a day, if you are going to take 4 trades and you lose like 3 of them, and you just earn 1, like 25% winning rate, you're going to still be break even. If you are like flipping a coin 50-50, you're going to be profitable, because you have like 4 points each time you won. So now you have like 8 points and you just lost like 2. So, okay, you are profitable at 6 points, even with a 50% winning rate. So that's why you study patterns, as Kevin stated. You study like candlesticks, support, resistance, higher time frame. So your winning rate is going to be way bigger. Like even though you have like 70%, you can still earn a lot of money. It's all about the psychological part. And you shouldn't think, oh, I need to earn money. I need to do like this. I need to hold this trade a lot. I need to close this trade very quickly. Like I have a lot of students, a lot of friends that they just trade like this. Oh, I have a 1-to-4 risk reward, 4-to-1, and then his trade is going on his way. He's happy, but he's not confident. And when his trade, he's aiming for 40 pips, and when his trade hits like 10, he closes all the trades. And then I say, man, just let one running, like 10% of it, if you're not confident, because maybe this 10% can become a scalp to swing, as the group name suggests, So you can earn money with like 10% of your lot. You still can make money, although you closed your trade too early, maybe the momentum was not that good, but you are still having one runner at break even at the worst part. So, man, it's all about psychological stuff. There's no secret at all. Do you have anything to add, guys?
Hey, Kevin, can you put the support resistance lines on this chart?
Oh, Marcus?
Yeah. No, you, Kevin. You, Kevin. Somebody asked about the pin bar. I just want to show the point of why you want to look at major support and resistance levels.
I just gave you control, Kevin.
Okay, let me try.
Because that makes a difference. When people ask, well, was it a pin bar or, engulfing candle, it's the major support and resistance that you're looking for. That's why the higher time frames and going down is so important, because the bigger the time frame, the more powerful that area is. And the smaller, the minor it is, it's easier to break. So you try to go off the highest probability. Monthly is the strongest, weakest, second strongest. Daily is the third strongest, so it goes down in that order. So price is respected off those key areas better on a higher time frame. That's why the top-down analysis is the most powerful way, because you're going off the major support and resistance. And that could be a difference between why things might not. You got to see what price has done previously at that price level. That's why the past is always a good telling point for the future.
Exactly. Here, like if you put the support and resistances here, actually just looking at this candle, right? If the monthly closes like this, that's a bloody engulfing on the fucking monthly. Yeah. It doesn't get better than that. And another thing is, here's the resistance, right? You can clearly see candles are closing above here, under here. They're clearly closing above here. You look at the past all the way here, you can see they're wicking around this area, and you can see candles closing above, closing below. Okay, that's monthly, right? Now you have a monthly resistance already. Now you move down to the weekly, which adds confluence, because it becomes not just a monthly resistance, but it also becomes a weekly resistance. And look exactly where that monthly line I drew fits perfectly with the weekly, right? Just look left. It all makes sense. And if you go on the daily, it probably also makes sense. That's why it's always good to go from the top down, because it adds strength to it. And you can see here, okay, it did penetrate through, right? But what we have to take into account, like Kevin mentioned, is there's going to be a daily resistance as well. And you clearly just put it here where the candle's closed, right? Right here. Candle's closed just below here, and the candle's above here. Look where the wick touched. I mean, it's beautiful. And what you do after is what I do, for example, is I add psychological zones. So for me, that's like 113 area. And then boom, that's perfect. And right here, right, we're at 112.5. What's that say? Literally, that says that we have so many different confluences to the strength of this resistance. It's a monthly resistance, it's a weekly resistance, there's a daily resistance zone area, and also it's the first and second strongest psychological zones. The first strongest psychological zone being 0.000, and the second most strongest is 0.5s. So that's already like 3 different amazingly strong confluences to that resistance. That's why it's always good to go from the top down. And the more confluences you have, the stronger that zone will be.
Corbin, let me just interrupt you for a second. I'm going to resend the link because I had problems with my credit card there and I couldn't re-upgrade the Zoom.
Sure. Send
Just
it
give me
over,
a
man.
second. Okay.
Take care.